Okay, I'm going to be answering these questions. I think these are great questions, by the way. Thank you so much for asking them. And I think a video would be much better to articulate what I'm seeing here besides, just a little text paragraph. So I'm going to be covering these questions. So how do you come up with a retest of 87 on the weekly? Great question. So that is, you're talking about 3M. I do see you're using fibs right there. When I chart, I see the weekly could retest 50% fib at 85.62. Good idea. I personally do not use fibs. I do not use fibs. I primarily only use, let's go 3M, that's what I'm going to do. I only use about four things, or not about four things. I only use four things. I use VPA, which is volume price analysis. I use the volume profile. I use SR flips, so which is your support to resistance or resistance to support. And then I also use EMA. So I use those four things as the pretty much only technical indicators that I'm using. So why did I say 87? Well, there's a few reasons why I think 87. The first reason why I think it needs a pullback is because of our rejections that we've been having at 92.50. So we've been having, this has been serving as a pretty good resistance level for sellers. So here's your first one. Second one's going to be right here. Third one right here. So clearly an area of resistance. So that's the first reason why I think it needs a pullback. Second reason, we've had let's see, we've had about 21% run up in 3M since March. So as a little side note, buying, it's the little like saying that they have: stair steps up, stair steps up, stair steps up, on the buying side, and then elevators down. So that's your downside. So I do think that this does need a pullback after a 21% increase in the stock's price. I'd look for that, 20% bullish run up, 7%, 8% drop, and then another 10, 15%, 20% run up. So I'm definitely not looking for a long after it just had a 20% run up. I do think it needs some kind of sizable pullback. So that's another reason why I think it needs a pullback. You're not gonna get your 20% run up, your 2% decline, and then your 20% run up again. Obviously you have your randoms like Nvidia, but just not great banking on that thesis. So that's why I think it needs a pullback. Now, why do I think it needs to come back to 87? Those are two reasons why I think it needs to come back to 87. So the first reason is I use the 9, 21, and 50 EMA to basically just track trend on the weekly. There's a lot of day trades or swing trades that I like on the daily that just really don't have the risk reward I'm looking for. Like, for example, I did like BMY was a trade I took earlier. BMY, it looked great on the daily. It just, I knew going into it wasn't going to be a very long swing trade, just because on the daily, sure, it looked great. We had that nice run up to 54, but if we look at it on the weekly, this has been a severe downtrend since about 80, and the EMAs haven't even based yet. So you need that basing period. You need that basing period where the EMAs are going to flatten out before they eventually start curling. So on 3M, what's nice is we do have that basing period. We do have that basing period since about, I guess you could even say like back here on like March 2023, we've had this basing period where the EMAs are flattening. We're finally, look at what's exciting about 3M is look what we're doing right now. We're finally having those EMAs cross to the upside. That 9 is finally coming up above the 50. The 50's been basically flat since October 23, and the 21 is finally starting to curl up thanks to this Monday, March 11th weekly candle. So EMAs is going to be my first reason why I want it back to 87. If we put on our thinking hats, let's think 87 comes back, right here. What are the EMAs going to be doing? Well, our 9's probably going to be a little farther after this weekly closes. The 50 is going to be a little farther, and then the 21 is going to be pulled up. So those EMAs are going to be extremely coiled, which is very explosive. I absolutely love when the weeklies are coiled like that. Usually signifies, consolidation and some kind of expansion either to the downside or upside coming up. So really good risk to reward when those EMAs are coiled like that. Second reason why 87, if we turn on the volume profile, something that I use, it just so happens, of course, that the volume profile point of control, so where the volume has accumulated the most out of however many weeks, is pretty much right at 87. So I could say 87.18, but I just say 87 for simplicity. So That should answer the first question on why I said 87. Second question, trying to get better with entries, often late due to hesitation, not enough confirmation. Hesitant to take UPS even though it has broken 4-hour trend and double top. Good. Squeezing between 8 and 50 SMA. Both directions, wicks hold orders. Yep, it is still under the 200 EMA or MA moving average, but wicking over it. Bollinger Bands are telling me more move, but I'm confused with it holding the 50 MA and the indecision on the weekly candles. Or I do see false breakout over 20 moving average. Okay, trying to help get a better sense of stronger confidence. Okay, good. This one I also struggle. This one I struggle with. I mean, still kind of today, but I think I'm a little bit more confident in my trading. Yeah, as of late, I guess. But I think to help with confidence, I think there's two things going on here. So I talked about it earlier in the video, but I only use 4 things. I use 4 things to take trades. You know, I have 4 things to give me my thesis for trades, and then if it invalidates that thesis, I close a position. It's kind of simple as that. But I think you mentioned already, you mentioned you're using the simple moving average, the 200 moving average, the Bollinger Bands. I know you said you used fibs right here, so I think picking 3 to 4, maybe even 2 technical analysis tools to that make the most sense in your head and that make the most sense for your trading strategy, however that is. I think that's going to give you a lot of confidence. So I think, outside of the 4 that I watch, I don't care what RSI is. I don't care what Bollinger Bands is. I got my 4 that I'm watching, that I've back tested, that I have confidence in. So, like if someone says, oh, well, insiders are selling here. Why? I honestly completely ignore it. I ignore everything except the 4 technical analysis tools that I use and that I feel the most comfortable with for my trading strategy and what I've had the most success. So I think that's number 1. Maybe limiting the noise. Maybe limiting the noise and focusing on what works best for you, I think is going to help the most here. Second thing that helped confidence is definitely back testing. So for back testing, I think I have one up already, but this is when I back tested when I was actually day trading. I was day trading using the 15-minute time frame on specifically ES, but basically I would have my rules over here. So I'd have my rules, and then I'd have my little equation to determine profitability, and then some strategy. So BNR stands for break and retest, just because that fits the best in my mind. So basically what I would do is I would hop in trading view. So I guess we can go do it. Let's go day trade. And test the S&P 500. So yeah, I'm on the daily. Let's go. I'm not even gonna look where we're at. Okay, let's throw on the 15 minutes, and now let's back test the 15-minute. Show you what I'm talking about. So time of day. Okay, we're overnight. So overnight, we do not want to be overnight. I am not back testing overnight. I am not trading overnight. Let's go all the way to 9 a.m. Central. Okay, there's our open. So I have my rules in there. I'm looking for a break and retest of a specific range. So I think I said, oops, not that one. Establish a range. I'm looking for a high volume breakout. I'm looking for a low volume pullback. I'm looking for a rejection or buying, which is going to be my confirmation on increased volume. And then I have my exit rule down here, which is exit when either the following happens, so 9 EMA breaks or price closes above or below a rejection or support level. And then just as a little rule, no longs under the 9, no shorts under the 9. So let's get into it with those rules in mind. So we're going to establish a range. So we did have a fairly decent upper wick right here. So we could say we did close above that. Now we did just get a very high volume 15-minute candle. So that's a little concerning for longs. Doesn't look great. Volume's declining as price pushes up. That is no bueno. Let's see how it happens. Okay. There's your sell. Now this already, is this a low volume pullback? It is absolutely not a low volume pullback, so I'm not necessarily looking for longs off this level. Let's keep going. Okay, price is somewhat supporting this level. All right. We kind of have a weird range going on. I'm not in love with this. We got a range up here. We got our range right down here, I guess you could say. So I don't really care with anything in between here. I really don't. Look, yeah, and we didn't do shit for the rest of the day. So let's go try one more day. Let's delete these. Try and get an example, I guess. Let's see if we can fly through. Get an example. Okay. Okay, market open right there. All right, all right, all right. Opening range break. What in the world is going on today? This is the most lame day ever. Okay, so we had our range right here. We could not break it. We finally broke it. Did we have a high volume break? Not really. Not really. And volume was declining on the push-ups. So let's see if we... okay, nice bottom wick on high volume. Good. Let's see a confirmation candle. Not great. Not great. I honestly would not take this one even if it does continue higher, just because I have not seen buyers, really step in yet. I mean, we did have this right here, this candle right here. We had a little bit of consolidation, but I'd maybe consult with the 5-minute to see. Let's see. I can't go back that far. Yeah, that's right. Yeah, I don't love this. We're just gonna take it just for the sake of taking it. Okay, nice. This is a good trade. Nice. I was wrong. Okay, nice. Our break. What's our break? What's our exit? Exit is a break of the 9 or break below or above support. So what I'm talking about support is here's our previous rejection, and we just closed above it on this 15-minute. Okay, let's go. Oh, wow. What a trade this was. Oh, man. This is a nice trade. We're looking for a break of the 9. A break of the... What? This is an unbelievable trade. Come on now. Break of the 9? No, but we did break structure right there. That also did happen to be end of day, so I actually did have a rule. I think I might have had a time rule in here. I didn't take anything after end of day, but that would be a winner, and I would log how many points that netted out. So let's sell it. So it'd be 45, 42 minus 45, 33. So that would be an example of how I backtest. So, just collecting, about 100 data points of different trades and getting an idea of how your system trades is very beneficial for confidence. So that the two things: reduce the noise, focus on only a few more things, and backtest. Take trades. How long do you plan to stay in the trade? Asking for determined trailing stop. So I definitely do use a trailing stop, and that trailing stop is a 9 EMA on the daily. So with my swing trades, that does come with a little bit of an exception. If we're still in the range of like what I'm trading off of, like if we haven't had an actual break of what I'm looking for. So I guess you could use ADI here for an example. So if we did end up actually breaking, this range yesterday here, and of course we've had this CPI gap down. But a break of the 9 here, I wouldn't necessarily be looking, just because we're right back to the zone where we just left. So I wouldn't necessarily use a break the 9 here, but when we get like a push away, so SCZ was one of my bigger wins here recently. SCZ, we were long back here. Specifically, we were long at this doji candle right here. Actually, no, it might have been this candle right here, because the doji would not have provided confirmation. So we were long here. So see how we're still within this range. So any break of the 9 within honestly, even within down to here, we're still in this consolidation zone. So we're consolidating. A break of the 9 wouldn't be like a valid exit signal if we hadn't started trending. So the break of the 9 is really when it starts trending, is when I utilize it the most. So here we're trending, and we finally broke from that consolidation. We're trending up. So any short-term break of the 9 is when I look to exit this position. So it helps with a few things. It helps you, one, stay in trades much longer, and it helps those winners outgain those losers significantly. So here we had a rising wedge. Now you can obviously determine that this is a rising wedge and that you'd like to either take risk off or completely exit the trade. That's kind of subjective, but I'd be looking for the break of the 9 just to fully exit this trade. So there's your break of the 9. There's my exit. So we entered back here, and here's your exit. So that would have been a really good trade. But yeah, so that should answer the last question, and I hope this video helped.